Karen Taylor, Managing Director of Active Property Group, and today I wanted to go over the difference between investing in our pool mortgage fund and our direct mortgage fund. So let's start with the pool mortgage fund. As the name suggests, when you invest in our pool mortgage fund, we pool your investment along with our other investors and use that money to fund a diversified portfolio of loans, usually between 20 to 30 at any given time. The fund then pays quarterly distributions to investors made up of the interest paid by the borrowers within the fund. You also have the option to reinvest your quarterly distributions so you can compound the interest. Our pool fund is open to both wholesale and retail investors, with a minimum investment of $10,000 for retail investors and $25,000 for wholesale investors. There are no application fees. However, retail investors pay a 0.5% per annum fee, which is taken out of your quarterly distribution and paid to our independent trustee, Primary Securities, who operate the fund. We don't have a minimum term that you need to remain invested or charge an exit fee, and we offer redemptions on a quarterly basis. You can choose to invest as an individual or joint individual or via a trust, company, or self-managed super fund. The pool fund is a passive investment where you rely on the expertise of mortgage managers to source the borrowers, manage the loan, and ensure that they pay the loan back on time. Now let's take a look at our direct mortgage fund. When you invest in our direct fund, you select which loan you want to invest in based on the interest rate, term, LVR, security, property, location, etc. We'll send you all the loan documentation, including the due diligence, valuation, loan summary, so you can make the decision whether or not to invest. Only select loans, usually the larger ones, are open to direct investors, and they are offered on a first-come, first-served basis. Direct investments are higher risk and therefore only open to wholesale or sophisticated investors, and I'll explain a bit more on that later. Similarly to the pool fund, you can invest via individual, joint, trust, company, and self-managed super fund entities. The minimum investment for our direct fund is $250,000, although we can reduce that to $100,000 for first-time investors. When you invest, you're invested for the entire term of the loan, and you receive your funds and interest payments at the end of the loan term, which is usually between 6 to 12 months. The interest rate paid to investors is based on the individual loan. Investing in our direct fund is more of an active investment as you make the final decision on which loan to invest in. As an FYI, a wholesale investor is a person or entity that has obtained an accountant certificate within the preceding 6 months stating that the client either has net assets of at least $2.5 million or has a gross income of $250,000 per annum for at least the last 2 financial years. And a sophisticated investor is someone who invests $500,000 or more in their first investment. A retail investor is anyone who doesn't qualify as a wholesale or sophisticated investor. So if you'd like more information about investing in our pool mortgage fund or direct mortgage fund, make sure you subscribe to our YouTube channel and then get in touch with our investor relations team. You can find our contact information on our website, activepropertygroup.com.au. Thanks for listening and see you next time.